Hey traders, John Howell here. Happy weekend to everyone. I'm just jumping out of my skin, excited for these markets. I so am. It's like, there's so many amazing opportunities across the markets. Now, today I want to be bringing you back to big picture, okay? For the last videos I've been doing mainly on the short-term technical analysis type of view, what's likely to happen moving forward over the short term, all right? But what do I see happening with gold and silver and inflation and the Great Reset and the next recession? What does that all mean long term over the rest of this decade? And I've got some pretty big projections on gold and silver that I think are just going to blow you away. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so what I've been doing right now for me, it's a Sunday morning and I've just been doing some study and some analysis across the markets. And we all know, right, smart investors, what do smart investors do? If you look at people like Ray Dalio, look at people like Paul Tudor Jones. What do they always do when you hear interviews with them? Well, this here is like the, and they go back in time, right? What's happening right now is like the, and they go back in time. Why? Because similar things happen for similar causes. For you guys that have been studying Ray Dalio stuff, you know, the changing world order, you would know that history does keep repeating itself, right? Same things happen, same cause effect relationships and stuff like that. So if I actually look at what's happening right now in the markets, and if I bring it back to a similar time, we all know, or you may have heard, if you haven't, then the last time we had this much inflation was back in the 70s. So if I'm actually looking at the actual chart right now, we can see that this here was basically this right here was the start of the 70s. And it's so interesting to see that as I speak right now, remember this is the 80s here. So this is the end of the 70s. So as I do this recording today, the market is pretty much going in line with exactly what happened in the 70s. Now, what happened in the 70s? Initially, we got what? Initially, we got a bit of a drop in the inflation rate, right? This is inflation rate, not the stock market or property market, just inflation rate. So initially, we got a drop in inflation. If we have a look at what happened recently in 2020, look what happened, right? We initially got what? A drop into 2020. Now, this one here was a lot more steeper. And then look what happened. Then we had rampant inflation, or then we had a very big inflation spike. And now we're getting what? A very big inflation spike. And then obviously what happened after that inflation spike, what happened is you can see that they went through a deflationary period, and then the market actually then pulled back, right? And call this a recession, call this whatever you want to do, right? But it's just they went through a deflationary period. And as you know, we are actually starting to see the deflationary period starting to form across asset prices and stuff like that. Yes, inflation is high, but I don't believe we're going into a rampant inflation economy again, right? Right now anyway. So we could be in line with exactly what happened in the 70s, right? So I do believe that we are likely to see at least a bit of a pullback in the inflation rate, right? As we go through the recession, as they keep tightening, as they keep pulling money out of the system, so on and so forth. So then look at this here. So then what happened is, what do you think they did? What do you think? And let's actually just keep it really simple. What caused the inflation in the first place? Printing lots of money and putting it in the hands of people. See, that was the differences, right, this time. See, people are like, well, and I heard this from very smart people, and I'm like, oh, that makes sense. And what is that? Oh, well, they've done a lot of printing of money in the past, and we didn't get inflation. Why was this time different? Because this time they just said, instead of just printing money and putting it into the system and letting the system filter through to the individuals and so on and so forth, what do? They just went straight to the individual, said, here's a whole bunch of money. And then what do most individuals do? They go out and spend like crazy, right? Oh, we've got all this money, let's go. So because they did that helicopter money, guess what happened? We got big movement to the upside, right? A big movement in inflation rate. That was the reason why, that's the reason why we got that. So as they pull back, that's what, obviously, what do you think, and let's just keep it really simple here. What do you think happened here that caused the inflation rate to go from the mid-70s, and it was actually roughly around, from memory, just by looking at this, it was around the, it was the mid-70s. It was roughly around, I think it was 1976 from memory, front of there, right? What caused this, and what caused this last sort of, this point right here was around the 1977 mark, okay? So 1977 mark. So, but what caused this? Obviously, they went through a deflationary period, probably a recession, right? And then they did that. Guess what they did? They did the exact same thing. So that's what's probably going to happen here. So if history does repeat itself over the rest of this decade, now remember traders, okay? The way that I view the markets, the way that I trade, if you're a trader of the markets, you can't trade what's likely to happen for the next 8 years, right? That's investing. You buy, hold, you don't really care what happens with the price. A trader mentality is what I do, right? I look at moving averages, I look at chart patterns and so on and so forth. So that's the differences, right? What we're looking at right now is what could quite possibly happen over the rest of this decade. So if we have a look at that and we can see this going through here, we're probably going to get something like that moving into what? Probably 2030. So if history does repeat itself back from here, then the number one investment back here, and by the way, over here, something's going to happen here. What is that? That's going to be the Great Reset. It's probably going to be around the 2030 mark. Not right now, about the 2030 mark. Okay, so the 2030 mark and the Great Reset and all that sort of stuff. All of that takes time. And one thing that I've learned over my years is that when we hear, oh, the Great Reset's coming, and they think, oh, it's coming this month. Here we go. It's suddenly just kind of hit us on the head. No, these economic forces, right, take time to slowly go into place. So we're probably likely to get something like this. Now, if we do, I'm not saying we definitely are, but if history does repeat itself, because actually what I do believe, and this is what I truly do believe, is that as we're going into this next recession, they're going to do the exact same thing. They're going to print a lot more money. They're not going to stop. History gives us a 100% probability that they're not going to stop printing money. Well, you think they're just withdrawing? You think just because they're withdrawing liquidity out of the system right now that's it? The top's in. You know, in their balance sheets, and they're just going to keep bringing it back down to equilibrium? No, right? They're going to try to do it, and then guess what's going to happen? Recession's going to come, and then they're going to print a lot more money, and then it's going to go from there, right? That's what's going to happen. We all know that. But the next one, and this is where I really want you to think about this. If you want to know when a really good time is to get into these markets, well, when was a really good time in the last the decade so far, the last 2 years? When was the best time to get involved with the markets? Obviously, when the COVID crash, right? But what was the sign? When they said, right, we're printing, I don't think it was 5 trillion, and we're printing 5 trillion, we're putting it straight into the markets. What happened to the markets? So as we go through the next 2-3 years, and we start to go through this recession more and more and more, and things start to happen, guess what? I want you to be thinking about, now they're doing what? The market's crashing, there's big printing of money. Now it's time to start the yo, right? But that's probably a lot longer, because I think it was 5 trillion they did the last time. It's probably going to be 20 trillion next time, right? Because they're going to need it. It's going to be worldwide as well too. So that's what we're probably likely to see. So if we did see something like that, then check this out. If I go over here to the what actually happened in gold, right? Because gold is going to be massive. It's going to be a huge part. And there's going to be a flight to gold, especially when the currency starts to really be hammered. And again, that's probably later this decade, not now. So that, along with inflation, gold is going to be huge. So I said, okay, if that's true, if my theory is true, that history does repeat itself, and we're probably going to go through another 1970s, then how much did gold go up from the mid 1970s? And as you can see, we had a movement up, and then a movement down, and then we had a very big movement up from here. So you can see if I do a measurement from there, from that ultimate low point to the ultimate high point, and then I bring it to that there, it's over 700% increase, right? Now that's in, what is that? That we're looking at months here. So that there is probably a good 2 to 3 years worth of data, right? 2 to 3 years worth. What was that? 1970 to 1980, right? So yeah, a good 2 to 3 years worth of data. So if I said, okay, if similar things happen and we get a similar move in gold towards the end of this decade, right? So I'm not saying right now, but towards the end of this decade, let's just say, for example, 1966 or 1966. 2026 or 2027, we really start to get this type of move happening again. Can it happen? Sure. If history repeats itself, similar things are going to happen in the economy. So similar cause-effect relationships are likely to happen as we move forward. So if that does happen, and we do get that, if I'm looking at the market as I speak right now, if gold does hold where it is right now, and we use the same 700% increase, because remember, that's what happened back in the 70s, then look at this here. Again, I'm looking at a monthly chart here, but if I zoom it down, this is where gold is likely to be if we get a similar movement. 6,000 nut, 7,000 nut, 8,000 nut, all the way up at 13,000. Can you believe that? Now, again, if similar things are going to happen, if we get the same cause-effect relationships, if we get another big movement on the downside, right? And they do another big stimulus package and they do all that sort of stuff, we can see the writing on the wall. And then we know history gives us 100% certainty that they're not going to stop printing money. Yeah, they may be pulling it back a little bit, but go, look at Ray Dalio stuff. Go watch Mike Maloney's Hidden Secrets of Money. You see it very clearly that governments don't stop printing. In the next recession, the printing is going to be 3, 4, 5 times big. Instead of doing 5 trillion, we're going to be 20, 25 trillion. Guess what's going to happen to asset prices at that time? We're going to go through an extraordinary quality move, right? So keep your powder dry for that time, because when that happens, God, sell the kids, right? Because you saw what happened back in COVID. Look back when the old COVID crash happened, and then they put money in the system. Look what happened to asset prices. It's actually quite simple. So as we're going through this recession, we keep going down, and then you hear the big, oh my goodness, boom, and the big injection into the system. Guess what's going to happen to asset prices the next 6 to 12 months later? We're going to see there can be for you literally hundreds of thousands or even millions and millions and millions and millions of dollars. And maybe that's going to be, I have a big trade in mind. A big multiple 7-figure profit trade that I've always had a goal with. So maybe that's going to happen at that time. Maybe it's going to happen this year. I don't know. So we can see that through there when it comes to gold. But here's the really interesting thing. What about its sister? What about its sister? What's the sister? Silver. What about silver here? Silver R, all right? So if we go back to the 70s, let's go back to the 70s. This is what silver did here from a projection point, right? You can see back here, but silver didn't really start to kick in to about 19. As you can see, it went flat. Look at this here. Silver did nothing 1974 right through to 1978. Silver did nothing. And then look what happened. Boom. Right? This is actually very, very similar to what actually happened with Bitcoin as well. That's where, like, if you ever get flattening patterns like this for a long time, and then we start to break out, guess what's coming? Right, big move, big move. So we may be getting that in gold right now. Actually, if I go back to the gold chart now, and I squeeze this up, that's the reason why you can see how we're actually starting to get what? We're actually starting to get this overall sort of sideways through here, but you can see we're actually starting to get that flattening out period through here. So if we continue to do that, go through here for the next couple of years, and we start to break out through there, guess what's coming? So anyway, if we go back to silver here, and we go back to the same price, we can see this here. So if I use the same percentage projection, right, and I know this sounds crazy, right? If we go from, say, the low period to the high period, we can see that, again, over 2 to 3 year period, we had an extraordinary quality move. Now, we had over 1,000% increase. Now, let's just say, for example, in the second half of this decade, when they do the new printing of money and so on and so forth, a similar thing happens to silver. Now, by the way, guys, where we're going with electric cars and so on and so forth, that silver's going to be a major part of our economy. We all know that, right? So silver's going to be huge. Silver's going to be massive. So if similar things happen towards the end of this decade, then if you use the same projection from roughly where we are now and you project it up, then guess where silver target is? All the way up. And I know this sounds crazy. Keep going. 150, 160, 170, $200. $200. Now, by the way, traders, if you actually use long dated options, right? Now you have to be careful of this here. So I'm really watching my time because I'm going to be buying some really risky. This is where, anyway, I won't get into that. I'll talk about that bit later on. But the thing is, like when you're using options, long dated options, that could be huge. But even if you're just buying it and looking for 1,000%, like if you're, and this is where people are looking for the cryptocurrencies, right? To find the next big move. That's gone. That's done and dusted. It's not here. The next big move, the next big boom is going to be mining sector, right? That's where we should be focusing on. It's mining sector and metals. Now, when that happens, we don't know, and things take time. Just like with Bitcoin, right? If we go back and have a look at Bitcoin, what did Bitcoin do? Look at this here. Bitcoin did what? Bitcoin did the exact same thing, right? It's not like things just boom out of nowhere. Things take time. As you can see, look at this here. Remember I said before, when things go sideways for a few years and then we start to break out, get ready for big moves. That's the reason why Bitcoin went up, right? When the market goes sideways like that, you can just see the reason why. So that's what's happened. That's what we see with Bitcoin. And as you can see, like this is what's going on with silver. So for me personally, guys, the mining sector is the next shoe to drop. I guarantee. You know what? Actually, yes, I am, because I'm building positions in my portfolio around the metals and the mining sector for the rest of this decade to see potentially thousands of % increase with that. Especially if when I'm ready, I'm going to start to buy options with this. Now, put it this way, guys. Let me say this here. Roughly every 1% the stock moves, right? So if I start to buy SLV options or GLD option, roughly 1% that moves, it's roughly 10% increase in the option price. Roughly, okay, that's roughly. Now, it's not exact science there, but that's roughly anyway. So that's roughly what you start to get when you start to talk options. The problem with options is that you need to really be clever about what time you start to get into this here. So what I'm doing is I'm starting to wait to see, for example, with gold, what I'm doing with options is as we go over the next couple of years, I'm really watching this carefully. And then as we continue here, I'm hoping this continues sideways like this and just builds out and builds up. And then as we start to move out like that, I would buy as much time as possible, 2-3 years, as much as possible, right? Of time, you know, and you could turn, and especially, or if you buy out of the money options, which is really risky, you're risking the whole lot, really. But if you buy out of the money options, you can turn a $20,000 position into multiple millions, or a $10,000 position into 7 figures, right? That's the sort of numbers that I'm actually talking about if we are prepared for this. And that's where, like, guys, over the next 10 years, you guys can literally, if you're smart and you really study this and look at this and not try to jump in right now because you feel like missing out, but just be patient, let things unfold. You literally can turn a $10,000 or $20,000 position. Now, again, that's very high risk. If you do what I just said there, you're risking the whole lot, right? So if I put $10,000 in a position there, I'm risking the whole lot. But if certain things happen again in the economy, guess what's going to happen? That $10,000 or $20,000 position is probably going to be $2, $3, $4 million. Especially if you're buying way out of the money options, for you guys that know options, right? But again, I'm not looking at doing that right now. I'm just accumulating mining stocks and gold and silver for long term, that is, because I don't know when that's going to be. But as this thing continues to unfold and as this thing continues to tick along, guess what? We are going to see the boom, and especially in the mining sector. That's where, like, you know, the next big shoe to drop, guys. The next big shoe to drop, as in like the boom, is going to be the metals and the mining sector. Cryptos are done for a while, right? Look what happened and this is exactly what happened. If you're trying to find the next big boom, it's going to be the metals, miners, and crypto, and the metals and mining sector, right? Now, when I say the next big boom, I'm saying for the rest of this decade, what's the thing that's going to really just get people like chasing them over themselves like they did with crypto? It's going to be the mining sector, but but we could continue as we're going through a deflationary period right now. We're probably not going to see these things continue to pull back even more, right? So just expect that. If you're long-term holding this, right? We can never pick the bottom when it comes to these investing mentalities. As you can see, my investing mentality is different to my trading mentality, but there's the next big thing to happen, right? Is going to be that. So, and the thing is that if you look at history, look what actually happened on. We know Bitcoin, the cryptocurrency still has a lot more washing out to do. Let's go have a look at this here. I want to show you this here. Let's go to the Nasdaq, and look what happened with the Nasdaq, right? And this is what's probably going to happen with the cryptocurrencies. So Nasdaq had this is, as we know, the 1990 to 2000s. What was that? That was the tech bubble, right? The tech bubble through there, and then we had the tech bust. Okay, tech bubble, tech bust. So what happened? But then what happened afterwards? After that happened, right? We went through this big washing away effect. Oh, by the way, a bit of a fun fact for you: wherever we actually started going vertical in the bubble, we retraced 100%. Isn't that pretty cool? You'll notice that quite a fair bit. But look at this here, right? We never got back to these highs for a long time. It was so we did have a bit of a movement to the upside. This is what's probably going to happen with the crypto market. And people are still trying to hop in the crypto market because they saw, oh, well, crypto always goes back up and blah, 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 blah. It's like, maybe it will, right? Maybe it will, but that shoe has gone. Let's not focus on that. The next boom to come, in my point of view, and where my portfolio is continue to be adding for the long term, and I'd rather be investing in this than buying property right now. This is just my view, is that the metals and the mining sector is the one that's going to have the next boom. But on the short term means over the next year or two, we're probably going to see a lot more deflation in these metals and miners. And then what's going to happen is maybe on the other side of this decade, and that's why I'm really excited. It's more like 24 and onwards, maybe 2024, 2025, and then onwards through to the rest of this year. That's what I'm really, really, really excited, because as I said before, guys, this rest of this decade can literally not add 1 0 to your account, but maybe 3 or 4. Traders, I want to invite you to my webinar that I'm running today. And on this webinar, I'm going to share with you all the details to my #1 trading system for the last 17 years and how I only trade 1 hour per day. Plus, also going to be learning the 3 secrets that I had to master over the last 17 years to generate a really good income. If you go to johnsfreetraining.com, or there should be a link in the description, click on that. Go over there right now, register. If you are struggling with the trading right now, I promise you this is going to completely game change, because you're going to understand why you are going backwards and why you're losing money. And then I'm going to teach you exactly what the system I use that gets me a really high % win-loss ratio. So this is what I want you to do right now. Go to johnsfreetraining.com. Go over there, register for my webinar right now today, because you're going to absolutely love it. Or there should be a link in the description. And I look forward to seeing you on the webinar. So go to that right now, and I look forward to seeing you on my next webinar. Go to that right now. Go to johnsfreetraining.com. Go to that right now.